Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your fee back and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
All right. Good morning, guys. Welcome back to another live stream. Thank you for being here on this. Well, what is today? Today is Wednesday. On this beautiful Wednesday, we are back live taking a look at markets and quite a few things to look at here, should I say the least, because we do have the S&P 500 yet again ripping higher here. And just seems like an unbeatable train right now. The S&P 500, the NASDAQ as well. Parring all those losses that we saw yesterday. And I've just been on this consistent. I feel like I've said this a million times. This market is just so resilient. Every dip gets bought, and it does not seem like sellers can get a grip on anything. Here's the S&P 500, the NASDAQ right now trading just shy of our all-time high. Actually, it might be breaking all-time highs as we speak, which is absolutely crazy to see. The New York stock market just opened, so New York Stock Exchange, so we should get some volatility on that front. And we can take that down to like the 5-minute chart to see what's going on the NASDAQ, see if this rally here sustains itself to new highs or if we take a breather here today. But it just does not seem to want to quit. And day in, day out, we keep saying the same stuff. Breadth is not that attractive in the markets. Look at this. We have the Russell. The Russell cannot seem to get the same love. You know, here you go. You got the NASDAQ up, more than 0.5%, S&P up about 0.5%. And look at that. The Russell is flat to negative on the day. And the reason I point this out so frequently recently is because this market is being led by just a few stocks. And it's really kind of crazy to watch that on the index front. You guys know we like to check in on the indices as the New York session starts get going for U.S. traders. That does tend to cause some good volatility there. We'll watch the reaction here as we test all-time highs on the S&P 500. Is this going to drive higher and clear a new path today, or are we going to reject? We'll have to watch. So let's keep going. We'll take a look at some stuff here in the dollar index side of things. We can see we've cleared this level of resistance pretty good. We've seen selling across the board in this zone prior to NFP Day. NFP Day was able to break us out of that dollar index move. I have been bullish, and I still am bullish on the dollar index right now. And we'll see if this drives to new highs here. Again, when it comes to the dollar index, take a look at the daily chart. This is kind of what I've got pulled up. If you see here that we had this key level here looking left, this resistance point, we were able to clear above it and close above it. And so on this pullback, I think that we actually see a potential bounce here. If we don't bounce off this level, we could go back and retest that 4-hour chart level that we were just looking at, right? This area here of support, which let's go ahead and clean up our zones. This consolidation zone, if we do go back and retest that could be a buying opportunity or an attempt there. I am bullish on the dollar though already. I've got positions in play, and we are going to see if the dollar index can push for us. Otherwise, we'll get out and try and maybe retest at another level. But for me right now on the dollar index, I like this current level for a possible bounce, as well as this 4-hour chart at 103.7. Both scenarios, I think I'm going to take stabs at on being long. I am already long as we speak, so we'll see how that one plays out. Gold here, gold on the day, still just mixed. Just such a market that I just do not have any interest in right now. I know a lot of people love gold, and we always talk about gold on the channel, but it's just not moving with any sort of clean price action. You know, we talked about gold all the time during these this period of time during this sell-off that we saw. But once we go range bound like this, I mean, what else is there to say? Price action is just not giving us any sort of there's nothing working here, right? Unless you're a range bound trader, unless you just trade ranges, gold is incredibly boring. And, honestly, most retail traders, I would actually say, probably do like range markets. And the reason I say that is because a lot of the retail traders kind of go to is support and resistance, buying a low and then closing out when it hits resistance, right? That's like 101, the retail trading sort of strategy. Not that there's anything wrong with that concept, right? Support is support, resistance is resistance. I think everybody gets that. And so in some ways you might say, well, this environment has been pretty good. People are able to buy lows and then sell the highs and then kind of keep doing that. But for me personally, what I like to look for is, environments like this to change into trending environments once more. And that could go either ways. If we get more pushback on the Fed not cutting rates for a while, I've said this over and over, I think that's what gets us into sort of a more prolonged downward trend. And if to the contrary, we get a Fed that does start to see, if we start to see economic slowdown begin to happen, which is not really the base case right now, but if it does happen, the gold market could really strengthen, right? Because that would indicate that rate cuts could come sooner. Consensus was we were going to get rate cuts in March. That was the idea. That was not what we kind of pointed to on this channel, but that was what most market participants kind of thought. And that's why gold, had the potential, if it did get those rate cuts in March, to probably break out. But we didn't. The economic data out of the US has just been really strong, and that has pushed back the idea of rate cuts in March, right? So with that said, where does that leave us with the gold market? Well, that leaves us in a situation where the market doesn't really know when rate cuts are coming. And that doesn't give you a strong conviction as a bull. And, it doesn't necessarily mean we're never going to rate cut. So it doesn't give you a really strong conviction as a seller either. But if you continue to see strong economic data, and if you see a hot CPI number, those scenarios would probably tip the scale for me being a bear. And if we get a really cooling in the inflation number and we start to see that story for rate cuts come into play, I'll be a gold bull, right? So I'm really neutral and I'm really reactive. The price action here is pretty indicative also of just where I am at with gold. I'm pretty mixed. I'm pretty neutral on this market. Justin says, I'm a gold member from years ago and just now getting back into training. Hey, what's up, Justin? Good to see you. If you have any questions, please feel free to shoot us a DM. I've got some people on my team who can help you out with that. So if you could, just we'll drop the link here in the chat for anyone who has questions or needs help with a membership, getting access to our trade alerts, the Edge Finder, whatever it is. Please feel free to just click this link. You can speak with someone on our team. That way they can answer your questions since I'm unable to do it while we're on stream. Ballout says, I took profits on UJ sells and then reversed the position for a buy. What's going on with UJ? Let's take a look. UJ. I was looking at this one yesterday. I didn't really love the, I am kind of bullish on the dollar yen, but we've been kind of stuck in this resistance level here. This is a daily chart, by the way. Dollar yen, I do actually like it long. Like this is one of the currency pairs that I would say I'm more closely watching. If we come back and retest this low, that might be an area for me. Or better yet, to be honest, breakout retest. I like that strategy there. And the Edge Finder gives us a nice bullish reading on the UJ, I think. Let's see. Yeah, it did yesterday. So when I was looking at it, UJ was a bullish reading on the Edge Finder. I'm just refreshing it here for us to take a look at. So there it is. Okay, so USD JPY, bullish reading. We're getting COT data is pretty bullish. Retail sentiment would tell you that most retail traders are shorting the dollar yen. That's why we're getting a positive read there. It's a contrarian indicator. Seasonally, we expect some positive. Oh, I'm sorry. I'm looking at the NAS. What am I doing? There we go. We get a +6 for UJ as well. COT slightly bullish. Retail sentiment, same concept. Seasonally, not the best month. Okay, for the month of February. This is a monthly seasonal read, by the way. We should actually change this to say month over month, mom seasonality, trend overall to the upside, economic reads, inflation, labor markets. I want to show you guys the PMIs because we got PMI data recently, economic growth, PMI data. If you have the Edge Finder, you now have this chart. We've been working on this. And if you remember yesterday, I mentioned some tweaks that we wanted to make to PMI numbers. And I think we got that. If it loads. We're working. So yesterday I mentioned that I wanted to have some tweaks here done. And I think it looks a lot better. Check this out. Beautiful. Okay, we do have this. So ask the dev team to get these charts standardized to be a more selected period of time. If you are newer to my streams, then first of all, welcome. Thank you for being here. But second of all, behind this YouTube channel, we do a lot of, we're a software company. We build like data analytical tools for traders. And I thought this was a really cool one to look at. We have services and manufacturing PMI. Manufacturing is up top, services is down below. And what we've got here is we have sort of the latest reads on the economy. I love the PMI data. It's a really, really powerful indicator. It's actually kind of a lead indicator because it's a survey to, managers, purchasing managers. Are they hiring people? Are they buying a bunch of inventory? What do they see things going towards? It's a very, very powerful indicator. And so we're looking at US PMIs. We could, of course, select, by the way, if you're an Edge Finder user, you can select whatever you want. So we've got the data for lots of different things, but I'm looking at US, and what we can see is that we've had some pretty strong reads. I mean, the PMIs are looking strong. So economic growth is looking on the up and up right now. And if that is the case, that's going to be more bearish for gold and more bullish for the US dollar. So it's part of the reason why, again, PMI data is factored into our algorithm, right? The top setups algo takes into consideration PMI, retail sales, NFP, wage, all that stuff. So the Edge Finder is taking this PMI data, thinking through it, and punching out reads in the economy scale. It's really kind of a cool concept. We've got this kind of, the data comes into the Edge Finder, then the Edge Finder interprets that data, visualizes it for the user, and then also generates bullish, bearish setups based on it. So if you're, kind of a user of the Edge Finder, many of you probably will relate to this, but usually the first thing I do in my trading day is I head over to the top setups page and I look to see which things are getting more bullish or bearish readings based on the fundamental factors that we look at, right? Everything from COT data to labor statistics, inflation, PMI data, retail sales, etc. So in terms of setups here today, so I'm going to take out the neutrals for a second. So this is giving us only bullish and so bullish, bearish, very bullish, very bearish readings. The Australian dollar is getting a very bearish reading. The pound Aussie getting very bullish, dollar yen bullish. So these are a couple ones that I like. The NASDAQ also bullish, but I will say, let me show you guys something on the NASDAQ. The NASDAQ, I will say this about the NASDAQ. Right now, the NASDAQ looks a bit overdone to me. I think it's due for a pullback. But if I'm just dead wrong, and this market kind of goes sideways and eventually breaks out with conviction, I'll probably be a buyer. I know it sounds kind of crazy to buy it after it's had such a big run up, but I am a momentum trader at the core. That's how I trade. I trade things that are moving well. I don't want to try and fight the trend. And so, I've been a little bit frustrated and publicly so with this idea on like the Russell. Look at the Russell underperforming by 0.75% here today. Again, this is again going back to if you saw my video yesterday, I pointed out that this right now is a tale of two markets. We did a little fun edit in the video yesterday. Chandler did a good job with that. Tale of two cities, the classic. We morphed it into tale of two markets right now, because right now you've got one area of the market dominating, specifically the semiconductors, technology, and one area of the market that's just doing poorly, the Russell. Why is the Russell doing so bad? It's made up a lot of financial companies. It's made up a lot of companies that are not as profitable, that are still coming up, right? Smaller cap companies. So it's been a frustrating move, to say the least, to watch the Russell continue to underperform the NASDAQ and S&P 500. And it comes down to one thing. It's all about that interest rate stuff. If interest rates come down, the Russell will perform. So I do think that there's a place in the second half of this year for the Russell to do remarkably well. I think that there exists a catch-up trade where these roles reverse. Not necessarily the NASDAQ and S&P down, but I think there will be a period where the Russell has a really great run. When will that happen? Well, that's the golden question. Whenever those rate cuts come, you know what areas of the market I think will really be good? Russell and gold, right? Once you start getting a more solid footing on when these interest rate cuts are coming, those in my view are the places to be. Again, it's just a question of when is that going to come? Because right now you could say, if I just want to be in something that I know is going to do, is got the growth, it's got the earnings, it's the NASDAQ, right? That's why it's up and up and up and up and up. This one is more of a question mark. That's why it's not so beloved by the market. I want to ask you guys your feedback on something. Do you like this? So I tried this out. I thought about this. I can go 110, 125. I can zoom in for you guys. Would this be more helpful? Can you guys, Chandler or James, one of you guys do me a favor, and can we do a YouTube poll? Because I want to know what you guys think about this. I know a lot of people who watch the show, they're watching on their phone, they're watching on their desktop. Should I do 110 or 125 zoom? Which one looks better to you guys? 110, 125. If we could do a poll on YouTube, that would be awesome. I feel like I'm going to guess that, well, I don't know. I'll see what you guys say. I'll leave it up to you guys. What do you think? 110 or 125? See how I'm zooming in and zooming out? The reason I'm doing this is because if 125 makes it so you can read the chart a little bit better, I know that, again, a lot of people are on phones or they have a smaller screen that they're looking at this on. Let me know. Cast your vote. We'll drop a poll here on YouTube, and I'll come back to that in just a moment. I'll leave it on 125 for now, just to see what you guys think. Gold here, again, just still in a range. You can get down into the nitty gritty. You can look at the 4-hour chart and you can say, well, it's broken out of this resistance, but it's just choppy. Remember, the daily chart matters a lot. It is our North Star in terms of price action, in my opinion. I want to see a breakout one way or the other. So we'll keep watching that. Poll is up. Okay, cool. I'm going to pull up the poll really quick, just so I can see what you guys think. But again, please vote on that poll. Let me know what you think in terms of Zoom, and I'll continue to go through some markets here with you. Okay, so hold on. Okay. There's the poll. 70% of you guys say 125. Okay, loud and clear. If you guys want 125, we will. My camera cut out for a second. I think that happened because my computer started to lag for a moment, but we should be good now. And again, there goes the NASDAQ, topping the scales, testing the highs once again. And by the way, did you see the Chinese stocks did pretty well overnight? This daily chart that we talked about yesterday, we really cleared that level, and think we could see continued upside on the Chinese stocks. I have a very, very small position, and I'll continue to watch that one close. Oil here today, bouncing off that trend line that Frank and I drew yesterday together. Dollar yen. Again, what I'm looking out for on dollar yen, preferably, is a breakout retest setup. Could be really interesting. Okay, so 125 it is. If I agree. I think the zoomed in trading view, like in my own analysis, I would probably just do it normal sized. But for videos and content, like if you guys can see it better, then I'll do it that way. Take a look at the euro here today. The euro is off of a long-term support level trying to hold here. We're on the daily chart, and you can see this low from early December. We saw a big bounce off of this one. This led to a pretty strong end-of-year rally for the euro. We've traded all the way back. We've given back all of those gains as the dollar has creeped back into the picture as a potentially strong currency this year. And it's because, again, we looked at it earlier. You can start pulling up the evidence. The Edge Finder is all about the evidence finder, right? That's what we could rename it to. Like PMI data, right? We go back to this. The economy in the US is stronger than what people were thinking. It has been resilient and been surprising people for some time. S&P and NASDAQ are up on layoffs. That is true, right? AI is replacing jobs, which is creepy, but it is also, at the end of the day, as you know, weird as it is, stocks go up on layoffs because that cuts a lot of the cost to those big businesses. It's a weird reality. Retail sales, take a look at this. Retail sales has also been strong out of the United States, which is again showing the consumer seems to be hanging in there. We don't have it in here. We should. I'd love to get it in here. Is the consumer sentiment. I think that's on our to-do list, is consumer sentiment. But you know, we've discussed this recently. NFP jobs data strong. My point here, the evidence is stacked in favor right now, in my view, of a stronger US dollar. Until further notice, again, dips on the dollar for me are pullback opportunities. So I'm looking at this level here today. I think this could continue to push off of this zone and head up to 106. If I'm wrong about that, then I will stop out of positions I have on and we'll go from there. Let's stay on currency pairs for a second. I mentioned dollar yen breakout retest could be interesting. Take a look at the pound here. The pound kind of retesting its breakout point yesterday, so we could sort of clean this zone up here. So the pound here yesterday was able to really get underneath, well, 2 days back, really sold off on the NFP numbers, right? NFP and FOMC really drove the dollar higher. And now we're seeing the dollar kind of give back some of those gains. The pound is coming in. And, you know, this looks like it has the potential to sort of be a pullback before a push lower. We'll see, though. We could get down on the 4-hour chart, take a look at this level a little closer. Pound USD, again, is what we're looking at. We're looking at the 4-hour chart. And I do think you guys voted on the poll. People said they like 125. I think it does make it a little easier to see on you guys' screen, like which thing we're looking at and like what time frame and all that sort of stuff. And the sidebar, I imagine you can probably see that a little better. So that's good. The pound USD is pulling back. It might be headed to retest this 50% retracement from the swing high to the swing low. Price is pulling back. And you know what I will say, you know, the dollar, if you're going to trade the dollar, the least interesting one to me right now is actually gold. I know a lot of people trade gold, but gold's price action is so choppy. Compared to like this pound dollar move is actually pretty clean, I would say. You know, you had this range, right? It was very choppy, was very indecisive, but you finally saw a key breakout with some conviction behind it. Now we're pulling back. And I think, again, if you're a dollar bull, if you think the dollar is going to strengthen, these are the moments where you don't gamble on trades, you don't take huge positions, but you step up and you be a bull if you're going to be a bull, right? So I have positions on the dollar. We'll see if I'm right. And if we're wrong, we stop out like a man or like a woman. If you're a woman, you know, you be tough and you take your trades. A lot of times people will second guess the second a trade actually starts to set up for them. They don't trust their own setups. They don't trust their own strategies. They don't trust their back testing. If you don't trust the trade that you're putting on when you put it on, and when I say trust, I don't mean like certainty. I don't know that the dollar is going to rally from here. I just know my strategy. I know my risk. I know my reasons for entering a trade. And I know what I'm going to do if I'm right or wrong. Does that make sense? Like you have to know You can't know what the market's going to do, but you have to know what you're going to do based on what the market does. Does that make sense? Type yes to the chat if that made sense. You do not know what the market is going to do with certainty, but you should know what you are going to do in response to what the market does. That was kind of convoluted, but you have to look at trading. You have to realize that there's no certainties in a setup. There's no strategy that's a holy grail. There's nothing. And if you think that there's some candlestick pattern, some way of looking at candles that's just going to give you some mega ultra edge in the markets, you're just naive, because this market is full of really, really smart players. Do you know who you're competing against? I love to give this speech because it humbles all of us, myself included. Who are you competing against in the markets? Who has the most volume? It's the big hedge funds. What do they have? They have an entire warehouse-sized building full of PhDs in computer science, quantum computing, the best macroeconomists, the best everything. That's who you're trading against. Okay. So if you think there's going to be a magic candlestick pattern, and I'm not saying any particular strategy I'm not saying support and resistance is bad. I'm not saying smart money concepts is bad. I'm not saying moving averages is bad. Indicators are bad. None of them are bad. It's how you use them. It's how you add them to your strategy. And it's acknowledging that absolutely nothing about a technical based or fundamental strategy is going to be perfect. You're not going to have that kind of accuracy when you're competing against literal geniuses on Wall Street, right? That's what you have to understand. And once you understand that, your expectations for what trading really is go way down, and that's good. If you approach the market with a humble mindset and realize I'm not the smartest person in this room and I need to just exist with this market, go with the flow, react accordingly, and risk small, suddenly you can find your edge, right? You can find your edge in understanding the fundamental story and going with the fundamentals that make sense, risking small, keeping your technicals simple. No need to get all fancy with technicals. If you need to watch hours and hours and hours to understand technical analysis, it's not it. Okay. Technical analysis should be it's the only reason technical analysis would work, period, is if it was so simple that everybody was seeing the same things. If everybody sees a support level, then you have something. But if you have to get a PhD just to read the technical chart, I think it's overcomplicated. That's my opinion. Anyways, taking a look at the dollar index. If it does pull back, I mentioned this earlier, I am bullish right now at these current levels, thinking we could push off of this level. But if we do not, my second attempt will be down just a bit lower at 103.7 on the dollar index. Okay. Yeah. So you have to let your ego get out of the way. Absolutely true. It's just, you just realize, like, once I've been doing this for a long, long time, and the longer I do this, the more I realize that there are just way smarter people than me in this market. And I feel like in all of my years of study in this stuff that I know a good bit, but I'm so far away from knowing, I would never call myself like a market, master of the charts or anything like that. Is so naive to, that's why you get a kick out of people who are like, I'm the NAS killer, or I'm like, no, you're not. No, you're not. Do you know how much goes into the NASDAQ, like trying to dissect where that thing is going? It's there's a lot to it, right? It's hard. The markets are hard. Look at that. Russell completely gave away its 4-hour gains. This is crazy. Shot up, came all the way back down. And again, interest rate sensitive areas of the market continue to underperform, except for gold. Gold is actually making a push here. Of course, there is the geopolitical side that can always spike gold. Really, really interesting. A pip lord, a fundamental pip lord. The producer dropped me a key message there. Okay, so let's keep going. We'll take a look at some more markets here. Yields are down here on the day, just slightly. And remember that usually yields falling real interest rates are one of the most impactful things to gold. They have like a negative effect or an inverse effect. If real interest rates, which is the nominal interest rate, like the Fed funds rate, Fed funds rate minus the real inflation. So gold typically does really well when inflation is actually cooling, especially relative to the nominal Fed funds rate. Is that the environment we're going into? Well, that's going to be interesting to see. If you see economic contraction, inflation will probably come down and the Fed funds rate will also come down. But that's the thing. If you see a really rapid decline in inflation, as crazy as it might seem, that would actually cause gold to go up a lot, because that would lead to a really weakening US dollar, and a really weakening US dollar would spike gold. Concerns would erupt around the US economy, and that would erupt gold higher. So is that on the horizon at some point? Yeah, at some point or another, you will get a recession in the US, and that will cause gold to likely move much, much higher. It's just a question of when. You could be waiting 5 years for that. You could be waiting 1 year for that. You could be waiting 1 month for that. Well, probably not 1 month, but those signs could start to form, and that's why we consistently watch them. S&P 500, again, tempting the all-time highs. I think we reached a intraday all-time high just while we were on the stream, 49.81. And I got to say, it does seem like it wants to go test that 5,000 mark. It's a big round number on the S&P 500. The NASDAQ also flirting with trying to get above the highs. I have no positions on the NASDAQ specifically, but I have sold puts on several areas of the market that could be interesting. By the way, guys, if you enjoyed looking at all this market data with me and you'd like a copy of the Edge Finder for yourself, we do have trials available. We're going to drop the link here in the chat. If you'd like to try out our software, definitely worth checking this link out here. You can apply for an Edge Finder trial and get 30 days access to our software. If you'd like to use the top setups algorithm to help you find better setups, if you'd like to look at retail positioning, if you'd like to look at the COT data, if you'd like to look at the put call ratio, if you want to look at the NAAIM exposure index, which shows you what hedge funds, their exposure to equities. We have so much data coming in, and we're constantly just trying to keep up with our own creation, meaning we just want to improve it. We want to better organize it. We want to better visualize it. The Edge Finder at this point has, thousands of people using it to help them in their trading. And if you are considering getting a copy, why not try it out first? You can do so by filling out this form. And again, get yourself some data. We went through a lot of fundamental concepts and just the importance of how this market really works. This market is not head and shoulders patterns. If you understand that, and if you appreciate that, and you've been a little humbled by our conversation today on the stream, let me invite you to embark in the same kind of journey that I've been on. Once I realized that this stuff was hard, I realized I need to understand fundamentally how this market works. Like at its core, what makes markets move up? What makes them tick? What makes them move down? And the way to find that, to me, has been a very fulfilling journey in understanding the actual fundamentals of the market, understanding at a core level the sentiment of the market. What are institutional money? What's institutional money doing? What are retail traders doing? What are the economic data points telling us? What are PMIs telling us? Retail sales, consumer sentiment, GDP, all of these figures tell you the story of the market. And if you aren't using fundamentals, try out our software. Our software helps you to make fundamentals approachable, because you might be hearing me say all these things, and you might hear me say, fundamentals are so important, but then you're like, yeah, but how do I even look at them or use them? You have two options. The free version, the free option, there is a free option, is to listen to, podcasts and videos all day long, all the time, which is what we're creating here. So you have that option. You could also read articles and, do that. Or you can use the tool that we've built to help simplify the process. The Edge Finder helps you to source a ton of market data. It helps you to then also see the interpretive bias that it generates based on, inflation reads and labor statistics. The Edge Finder's goal is to bridge the gap between how hard and difficult fundamentals are, and for you to actually begin to start to understand and use them in your trading. So if you do not have a copy of the Edge Finder, check this out. Click this link. We'll drop it one more time if you don't mind, Chandler. For those of you guys who would like to try out our software, the link is in the chat right now. Just fill out this application and get going with it. It's, again, the sooner you start understanding fundamentally, I can say this. If you are new to fundamentals, once you spend some time, you will never go back. It's like something, once you start it, you can't stop it, because fundamentals tell you why the market's doing what it's doing. And your hunger for fundamentals will only grow stronger if you look at it. And then your understanding of the markets will actually come full circle. Instead of guesswork, instead of just looking at technical charts, get serious about your trading, get into the fundamentals, and I invite you to try out our software. Thanks very much, guys, for tuning into today's video. Appreciate you coming on, hanging out with me. And with that said, we'll see you back tomorrow. See you guys.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.